Why are they why are they growing? Why is it big right now? Is that something?
Yeah, so I'll tell you right now, the market's in quite an influx. So I do a lot of research and I understand that, we were just speaking about this, that, Florida has a substantial amount of deals, right? So does, now it looks like Phoenix is catching up, Dallas and so on. And I knew from the COVID era days that these were inflated prices. People didn't have to work from their, respective jobs and they could work remotely. Instead, they said, and I know here in New York, I mean, listen, if you could find an apartment for less than $4,000, that's a 1.5 bedroom. You consider yourself lucky. We're having a shortage of apartments, right? Far less someone paying $5,000, $6,000 for a small family when they can go buy a home and pay a mortgage for $2,500, right? So what was happening over time, and as everybody knows, these prices were being inflated. I mean, think about what's happening in the multifamily realm and CRE with loan maturity. So I mean, now, yeah, we can see substantial amount of deals in Florida, and I'm not beating up on you, Florida, by the way, if you're listening. Um, you guys had to do what you had to do, but you had your day in the sun. No pun intended. It drove up the prices, but now people realize that they're not even scratching the surface when it comes to their principal because now they owe more than their property's value. They're underwater. So what do? You try to either cut your losses and leave, or you try to get creative, right? And I think creative financing's starting to play a major role. And I think the way they're leveraging subject to, if that's what we were still sticking to, is
Mhm.
really those COVID era interest rates, right? Which we'll never get again.
Right.
So
So your twos and threes and 4% interest rates, we're not going to see that anytime soon. And as we're speaking today, I think the average is about almost 7%, right? Six and a quarter, six and three quarters, or 7%, right?
yeah, it's about 7, 7 and a quarter.
Okay, seven and a quarter. So you're not going to see those big things. So if you have somebody who has a property that is at 3%, and they're paying, if you will, below market rents or mortgage rates, trying to buy that same property at the 7 or 8% interest rate is going to be much higher. So getting getting that property subject to the existing financing is the way to go. And so a lot of those deals are popping up. Excellent.